Okay, I hope you had a great caffeine fix and ready for the final session today. We've got two speakers and then we're going to go to a panel session. No more Skype calls, so we're all okay there. So I'd just like to introduce the next speaker, Ivan Zasarsky. He joins us from Deloitte. He is the lead partner at Deloitte for forensics. He's got 20 years' experience across the regulatory sector, especially the mitigation of financial crime, including the use of advanced technologies, detection methodologies, algorithms, and platform development. He's going to talk today about the aspects of the blockchain paradigm, especially the contract repositories and the ability of the blockchain to mitigate financial crime. We're going to have a short presentation, then we're going to go into Q&As. But would you please join me in welcoming Ivan?
Thanks, Ben. Thanks very much. Please don't mind my accent, it's Canadian, and I live in Australia. I moved happily to Melbourne about 2 years ago and really enjoying it. So I have a couple of things to say about Australia. It's a great country, but the people are nicer, so thank you for having me. Just to get on, it's been very interesting to watch the advent of digital currency, and in and of itself, I think digital currency is a fantastic way, a fantastic paradigm to reduce the frictional cost of commerce everywhere around the world. Today we live in a digital age, to say the least, and everything in terms of the binary zeros and ones that are representations of our behavior, our holdings, our wealth, our attitudes, and so on, are all recorded and transmitted and move forward through various networks. One of those networks, as an outcome of various compositions, became the internet. And the internet works in a way which is, in many respects, challenging to execute on an ability to transact currency, to move currency, to interoperate and move forward. Consequently, normal currency, as it's called, or monies, that are part of the paradigm of centralization and the use value of sovereign currencies around the world is not necessarily designed for our current state of digital commerce, nor is it designed potentially for the future state of digital commerce. In and of itself, when you live and work in Scandinavia, you will hardly ever see anybody walking around with cash. So I lived in the Netherlands and formed a number of ventures in Silicon Valley and EMEA and in America, and it just became very strange for me, having labs and environments in Helsinki, seeing cash. Because when I came to Australia here a couple of years ago, everybody's walking around with very interesting bills fostered by Innovia and so on, which are lovely to look at. Canada's adopted the same type of technology, but you just wonder why the advent of digital wallets, utilization of digital currency isn't yet completely 100% there. And the answer to that is it costs money for adoption. There are barriers to entry, there are barriers to execution, some of which are positive and some of which are negative, most of which are commercially oriented. So when we look at near-field communication, when we look at chip-on-pin type of technology, the major debate that went on over approximately 12 and a half years was who was going to pay for the terminals at the merchant site, the modification of the technology necessary to go ahead and afford the customer and also the merchants the additional protection of being usurped by way of various means in financial crime. And until that question was adequately answered, and it's still being answered in the United States of America, there is not 100% adoption of even simple paradigms like chip-on-pin. So here we are looking at aspects of the Bitcoin paradigm, and today I've been asked to have a bit of a chat on one of those three major compositions of the paradigm, namely the blockchain. I find the blockchain extremely interesting, and as Ryan mentioned, so it can be used for many things. It's a paradigm. It's an ability to have a distributed registry of information by which activities, actions, are recorded in such a way that the entire number of participants in that network know within a certain period of time exactly what all the other participants have been doing. So all the actors know who's on stage, who said what to who, and everybody understands the actual theme or the purpose of the play that's being enacted. That's a simple way to talk about how this complex mathematical emulation of packets, repositories, and nodes actually functions. That's nice. That's a mathematical paradigm. That's all very good. That's an enabler. The question is, what do we do with it? So if we turn back the hands of time for a moment, every single one of these switches on the network in terms of how routers work actually uses a blockchain paradigm. It is not a new paradigm, which should offer some comfort. 3 ways. 1, if you have routers that operate on the internet, or the major switches that occur in terms of nation states or nodes in the internet globally, in actuality, each one of those possesses an address book. A master address book which is published and subscribed. Sounds similar to a blockchain? Those blocks are actually adopted by those particular routers in a way that they have internal addresses and external addresses. And the packets are routed and used according to those particular routing diagrams or routing registries. That's exactly what a blockchain does. Now, a blockchain is a very robust paradigm because it is a distributed paradigm. If any single node or any single actor fails to exist, that doesn't mean that the register disappears. Unlike what would be called a centralized repository, where if the actual block that sits in the centralized repository disappears, nobody knows where that information is. And so consequently, that information in centralized repositories has to be replicated in terms of service environments accordingly. Ryan had mentioned that his new venture looks at emulating trades between different participants. He used the analogy of the Depository Trust and Clearing Corporation, which actually operates every single equity bond and bearer certificate in the United States of America under an identifier called a QSIP, which is a certificate code. Consequently, the challenge in these particular type of circumstances, does the blockchain paradigm have the ability to emulate and execute the number of trades and transactions in a similar fashion? The Depository Trust and Clearing Corporation, under public information, emulates and executes over 1.67 quadrillion transactions per annum. Those are stateful made transactions. That's an amazing number. That's a lot of zeros. That's far in excess of what any exchange currently interoperating Bitcoin on blockchain paradigm has the capacity to do today. So when we reverse all these aspects in terms of looking how the blockchain can actually be applied, it is really at the end of the day a distributed register, which allows for a number of aspects. Everybody knows what everybody else is doing. That's a positive thing. That builds trust. In many ways, blockchain paradigm is an emulation of a distributed contract where all parties have a copy of that contract and all parties understand the clauses, rights, and conditions of how that contract will be interoperated. That's a pretty good thing. However, when we look at how regulation has to function, let's look at it from the perspective of why laws exist. So first of all, in terms of financial services in Australia, we have 3 to 4 various institutions. For instance, the Reserve Bank of Australia. We have APRA, the Sovereign and Prudential Regulator. We have ASIC, who regulates the aspect and interoperation of currencies, including exchanges as well as currencies. And last but not least, one of our colleagues here from law enforcement was talking about money laundering. We have AUSTRAC, which is the Financial Intelligence Unit and Reporting Function, which produces intelligence products for its various stakeholders in government and law enforcement. That network of bodies, inclusive of the laws that they operate under, protects us in Australia as citizens of Australia. That's an important construct. Now, the Bitcoin paradigm does not protect citizens or participants in and of itself because it is not designed to do so. Laws exist to protect the citizens of a country and provide them the various rights under the Charter and assure those rights have due course and due practice of law, including the judicial system, the parliament, etc. All those structures are meaningful structures. The obvious antithesis is that is anarchy. I choose not to live in anarchy. It's not a very good construct. If people will talk about what happens in war zones, it's not a very good place to live. So bringing that back to where we see in digital currency and the various component parts of cryptography, blockchain, and the distribution of that information as paradigms, all three of those composites work in harmony to be able to go ahead and provide users of digital currency the opportunity to seamlessly transmit and transact over networks and environments that were not otherwise designed to do so, namely the internet. If we look at it from a financial crime point of view, inherently there are a number of component parts. The cryptographic algorithms that allow for the mining of Bitcoin as well as the emulation of those public and private key compositions prevent, in many respects, the ease of access of counterfeit, the ease and interoperation of fraudulently producing Bitcoin, as well as the assurance of an individual sending or receiving a Bitcoin of being able to receive that particular unitized value of the Bitcoin itself. Those are all very strong, very important capabilities. And so from a financial crime perspective, it is less attractive for someone who wishes to go ahead and fraudulently emulate a Bitcoin, if that could be possible. And no cryptographic algorithm is unbreakable. It is only undesirable or non-economically viable to break that algorithm. And that's been proven over time. That's mathematically correct, actually. Standing next to that is the aspect of the exchanges themselves. Many of us had discussed the aspect that exchanges are built by people. People make mistakes. Not every patch, not every component, not every kind of risk paradigm for technology risk management and governance is completely adhered to on a day-to-day basis in any institution in the world. It's not humanly possible. However, by and large, by setting forth the proper measures and implementation and investments, you can have pretty good coverage, the rest of which is covered by insurance and the rest of which is covered by what we do in law enforcement investigation and analysis in order to protect those individuals who have value or property under law. That's a good thing. So where can financial crime occur with reference to this particular paradigm is certainly in the aspect of the weaknesses of the emulation and implementation of exchanges, the implementation and acquisition of funds as funds transfer through normal currency or normal currency exchange, and the acquisition or emulation of Bitcoin acquisition. And last but not least, of course, any merchants that are accepting any store of value, and we saw this in the early days, and I'll come back to this in a moment, of stored value cards and prepaid cards. When we talk about money laundering on that basis, prior to the FinCEN being able to go ahead and provide guidance and ruling on what prepaid cards could and couldn't do and how they were covered under the various acts in the United States of America, people were able to go ahead and take boxes of cards and drive them across border, and the only thing they would have to declare was the 2-cent value of each and every plastic card. In the meantime, each one of those cards could have been carrying $1,000 of US value. And so you could drive across and not declare millions of dollars of value simply by the fact that it wasn't covered under that particular guidance or legislation. That changed. And so we see that as the various intelligence agencies and a network of law enforcement and reporting entities or intelligence units, they're taking the time to go ahead and better understand what this actually means for commerce and for society, and that's a good thing. Because just making a knee-jerk reaction can cause more harm than good. In principle, some of the comments that were made before, it's very difficult to put together a regime of laws. They're complex, and any change that takes away can also cause other ramifications and loopholes and openings accordingly. In Australia, simple matters that AUSTRAC has put forward, for instance, in terms of consultation, in terms of identification and verification, the ID&V or the EDV aspects, have already just simple 1 or 2 words or a comma being moved in legislation can cause significant challenges in the way the financial services work here in this country. One can only imagine the 137 different composite laws that make up the anti-money laundering and counter-terrorist financing regime of the US could do. And you multiply that across 80 or 90 different countries around the world, and you get a pretty complex picture. But in principle, financial crime will always occur. There will always be another modality to go ahead and bring forward. And Bitcoin in and of itself is neither good nor bad. It is simply a means by which we as human beings can conduct commerce in a more effective way and in a way that is potentially less costly, being in and of itself frictionless. So to conclude, the blockchain itself is an excellent paradigm. It has been tested, it has been implemented, and in and of itself there's been only a number of theoretical challenges to it from a financial composite, one of them being the race attack by which one acquires a block, emulates the block, inserts your own information into it, and then uses that to usurp either additional bitcoins being offered through the paradigm or actually producing fraudulent information of what the actual further blockchain participants will acquire. That's not unusual because it's been done within internet emulation and router switching for approximately 23 years. So there are ways to prevent that. I hand it back to you.
Thank you very much. Just out of interest, can I ask you, in Australia, who your customers are, whether they're private sector, public sector, or both, and what kind of advice are you giving them on these sorts of issues?
Well, I can talk generally because I can't speak specifically.
Yeah, please. Yeah.
They are all of the above, as one would expect. Our organization, Deloitte, being about 216,000 people around the world, and the largest financial services sector organization in terms of consultancy as well as in financial crime, pretty much touches many of these issues, inclusive of providing advisory to participants in digital currencies and the 3-letter agencies or regulators around the world. Yeah.
Thank you. Look, I would say that we've got a panel at the end of the day, which Ivan is kindly agreeing to participate on. So if you've got any questions now, we can ask Ivan now, or we can save them for the panel. So does anyone have any questions right now for Ivan? No? Okay, well, let's say, would you please join me in thanking Ivan for his presentation? Thanks very much, Ivan.